What is the importance of finance in business? Any firm depends on finance, and without it, it will inevitably fail. Finance plays a critical role in ensuring that organizations succeed in today's competitive environment, from managing day-to-day operations to budgeting for future investments. Companies need financial resources to sustain their operations as they develop and expand. We'll discuss the value of finance in business and how it affects many aspects of an organization's operations in this video. Understanding the role of finance is crucial for long-term success, whether you're a startup firm or an existing company trying to expand your operations. So let's get started. What function does finance serve in a company? Because it aids firms in reaching their financial objectives, finance plays a crucial role in business. A wide range of activities are included in finance that are focused on controlling and optimizing the value of the resources that are accessible to organizations. It entails examining, planning, managing, and disclosing many financial facets of the business activities. Managing cash flow is one of finance's most important roles. To ensure they can cover daily operating costs like rent, payroll, and other overhead charges, businesses need to have enough cash flow. By precisely recording income and expenses, the finance department makes sure there is enough money available to cover these costs. Making investment decisions is yet another crucial function of finance in the business world. Businesses must make sensible investments in assets that will produce profits or boost productivity. Companies can find chances for long-term investments through the use of financial analysis methodologies. Business risk management is heavily influenced by finance. Financial experts examine market trends, evaluate potential dangers connected to various assets, and offer suggestions on how to effectively reduce those risks while still making money. It is impossible to overstate the importance of finance in business. Without effective financial management strategies put in place by professionals within an organization's internal structure, or external consultants like procurement services providers who manage sourcing from suppliers at competitive prices, businesses would find it difficult to survive in a climate of rising competition and economic uncertainty. Corporate/business finance is a critical and necessary function in every company, and effective financial management is essential for growth and survival as it entails controlling the organization's financial resources and financial activities. It is typically handled by a group of finance and accounting experts or the finance department. Online financial analytics courses are offered by XLRI to assist students in deepening their understanding of complex accounting and finance concepts and in keeping up with evolving trends, systems, and legal requirements. Even while having a clear goal and a top-notch product are a company's primary requirements, managing finances effectively is also crucial. What effects does money have on business? Business success is greatly influenced by finance. It gives businesses the money they need to launch, run, and develop their operations. Without sufficient funding, firms are unable to pay for the personnel, supplies, or equipment required to run their day-to-day operations. Additionally, finance affects how decisions are made within an organization. To ensure that they can pay their bills while still turning a profit, businesses must carefully manage their money. Businesses need financial data and analysis tools that assist them in making wise decisions regarding investments and expenses to accomplish this efficiently. Risk management is yet another essential component of finance. Businesses must handle a variety of risks, such as market volatility and unforeseen expenses, which can negatively affect profitability. Organizations can plan for potential risks and take action to lessen their effects on operations by routinely evaluating financial data. Finance has an impact on businesses in more ways than merely managing cash flow. It has an impact on every area of corporate operations, including decision-making and risk management techniques. Therefore, to ensure long-term success and growth, companies must have good financial processes in place. What other sorts of finance are there? Companies can use a variety of financial instruments in the business world to meet their financial objectives. One is equity finance, in which companies raise money by selling stock in the business. This makes it possible for investors to become shareholders and partake in the earnings. Another popular kind of financing is debt finance, in which companies borrow money from creditors like banks or other lending institutions. Businesses are required to repay this loan sum plus interest over time. Leasing is a different method of finance that entails long-term rentals of assets like machinery or equipment. This can lower firms' up-front expenses while still giving them access to the tools they need. Another sort of funding is venture capital, in which investors give money to new businesses in return for ownership stakes and potential future rewards. Crowdfunding has gained popularity as a different type of financing since it enables small firms or startups to raise money from numerous people who each contribute a little amount via internet platforms. When it comes to managing their money and attaining their objectives, businesses may make educated decisions by understanding the many financing options that are accessible. What are some typical financial objectives for companies? Any organization needs financial goals because they keep operations on pace and target. Increasing revenue by a set percentage each year is a common financial objective. The consumer base might be increased, or new goods or services could be offered. Increasing efficiency and lowering costs are other financial objectives. Businesses can increase profitability without compromising quality by streamlining internal procedures and looking for methods to reduce pointless spending. Some companies might also want to grow their market share, which entails attracting more clients from their sector. Companies may need to spend money on marketing initiatives or find ways to stand out from rivals to accomplish this goal. Strong cash flow is yet another important financial objective for companies. This entails keeping sufficient reserves for unforeseen costs or opportunities as well as handling accounts receivable and payable correctly. Some firms may have long-term financial objectives, such as saving enough money for expansion plans or setting aside emergency reserves in case of future economic downturns. Businesses can make strategic decisions that will ultimately help them succeed if they have clear financial goals. How can companies reach their financial objectives? Any business must meet its financial objectives to succeed and develop. To ensure that the goals are achieved on schedule, this calls for rigorous preparation and implementation. Businesses can achieve their financial objectives by developing a budget plan that details all costs and potential sources of income. This enables businesses to monitor their expenditure trends and make the necessary adjustments to ensure they have enough cash flow to accomplish their intended goals. Businesses can also reach their financial objectives by investigating new revenue sources, such as launching new goods or services or entering new markets. Businesses can lower the risk associated with relying primarily on one source of income by diversifying their sources of income. Effective debt management is also crucial for reaching financial objectives. To reduce interest costs, businesses should pay the minimum amount due on low-interest loans while prioritizing high-interest debt first. Technology investment may automate procedures, cut expenses, and eventually boost profitability. For instance, using accounting software instead of manual bookkeeping techniques will make it easier to manage finances. In conclusion, developing effective budgeting plans, looking into new income opportunities while effectively managing current ones, using effective debt management techniques, and investing in the right technology tools are necessary to achieve financial goals. Conclusion: the financial side of any firm is essential. It aids in decision-making and helps firms reach their financial objectives. Without sound financial management, companies may experience cash flow issues or miss out on growth prospects. Businesses can grow and win in today's cutthroat industry by comprehending the value of finance and employing numerous funding solutions. There are several ways for businesses to obtain the cash they require to foster development and innovation, from conventional bank loans to alternative funding sources like crowdsourcing or venture capital. Companies can develop strong connections with suppliers through procurement strategies that support maintaining profitability while assuring on-time delivery of goods or services with effective financial planning and management. In the end, it's crucial to prioritize your finances as part of your entire business strategy, whether you're in charge of a small startup or a major organization. Take charge of the financial destiny of your business by starting to research your financing possibilities right away. Do you like it? Kindly give your valuable response in our comment section below. And don't forget to subscribe to our YouTube channel for more interesting and informative videos.